In this week's series, we are focusing on initial public offerings. The Bloomberg IPO index at an all-time high. That index measures the performance of stocks during their first publicly traded year. Well, joining us this morning for a look at what's driving this solid showing by IPOs and really what's in store for the second half of the year is Brian Hamilton. He's the CEO of Sageworks. That's a financial analysis firm that specializes in private companies going public. Brian, good morning.
Good morning. How are you, Carol?
I'm doing pretty well. And as you know, we were talking about the Bloomberg IPO index. It's at an all-time high, so it's doing very well. Why are IPOs doing so well in this current environment?
Yeah, actually, the analysis of this, in my opinion, is pretty straightforward, Carol. The strength of the IPO market is going to basically be very much related to the strength of the market generally. So I think that's what's going on.
All right, and Matt, let me bring you in, because you were just looking at the index and showing the run-up. You got a question for Brian?
Well, yeah, I was wondering what you think about the strength of the IPO market and how closely it's connected to the strength of the M&A activity that we're going to see. There's been a lot of talk about M&A possibly slowing down. Do you think that has been a boost to IPOs, and do you think if M&A slows down, the IPOs or the shares that come out in IPOs will not gain as much as we've seen them gain lately?
It's a good question, Matt. Basically, though, the market dynamics, to me, are the most important thing here. You've got a lot of money chasing few deals, and whenever that supply and demand metric happens, you're going to have M&A activity, you're going to have good prices, and that's really what's going on. It's very difficult, though, Matt, to tell what's going to happen from now to the end of the year, but basically this has been going on for the last year, and all the data supports it.
All right, so having said that, Brian, where do you think we're going to continue to see a lot of IPO activity?
I think, the typical companies, tech companies, biotech, information service companies, for sure, some pharma companies. The composition of that's changing a little bit. There's more tech companies going public now, Carol. But basically, the composition is going to be the same as it has been for the last, 5 or 6 years.
Well, let me ask you, though, looking at my notes here, you actually think, though, some of the IPOs that go to market are going so too early, correct?
Definitely.
Anybody who comes to mind?
Well, yeah, that's interesting. I mean, to me, and I think I can answer this sort of broadly. If you see a company and their growth rate is pretty good, but they've been consistently unprofitable, they've got negative cash flow from operations, they're a smaller company, they've got sales maybe less than 50 million, and they're going public, in my view, they're going out a little bit too early. And you can see that pattern with some companies, and more than a few, very strongly to me.
Well, let's talk about what we've seen so far this year, Brian. Which of the companies that we've seen so far you think were some of the worst IPOs?
Wow, okay.
That's
funny. Well, again, companies that are unprofitable, the growth rate might be pretty good. There's been a bunch of them. And by the way, the data here is very strong. If you look at the data, 46% of companies going public this year so far are unprofitable. And that's a rather daunting statistic. So to me, if you're a company and you're going out, you're unprofitable, you've got negative cash flow from operations, even if you've got decent sales, you've got a problem over the long run unless you can turn to profitability. And if you look at that data, Carol, you'll see that not all of them are actually turning the corner.
All right, but you don't want to name names, I guess, right?
No, I avoided your question, but I'm trying to give some general parameters.
I'm letting you off the hook. All right. Hey, Matt.
Well, if I might, Carol, let me jump in there. One more thing. If you're looking at a company and the growth rates, say, at 25% a year in terms of sales, but the unprofitability rate, basically the loss rate, is going faster than the sales rate, this is a bad situation. And there are a lot of companies that are basically below that bar, and it's really interesting.
All right. I know Matt Miller wants to jump back in here. Matt.
Yeah, I was wondering, we see now about double the amount of IPOs in the first half, at least money raised in 2007 than we did in 99 and 2000. Do you think that it's too much? Do you think companies are rushing in because they're afraid liquidity will dry up?
Absolutely, Matt. Great point. Great point. It's simple here. Again, you've got few deals, you've got a lot of liquidity in the market, and basically these companies are going out because they want to take advantage of market dynamics, which is fine for them, Matt, right? I mean, they basically want to get money. They want to get it at favorable terms. The challenge is for people as investors, look at those companies and make sure they've got some good operating performance. But your general point is excellent. A lot of money chasing few deals, higher prices, a lot of activity. I don't think it's quite as messed up or as crazy, Matt, as 1999. If you look at the real granular data,
Right.
but there's definitely some flaws there with some companies going out.
Brian, just got about 30 seconds left here. So what do you make of Blackstone going public? You've got Fortress, and now you've got KKR talking about it. These private equity groups going public. A good thing,
wow.
just kind of quickly.
Right. Wow. Who knows? I mean, who really knows? The long-term impact, very difficult to tell, Carol. There's, again, a lot of liquidity. I think you're going to find other companies like KKR going out pretty soon. But the long-term implications are tough to take.
All right, we've got to leave it there. But it's still going to be a busy IPO market for the next 6 months, right? Quickly?
I think so, Carol.
All right, going to leave it there. Brian, thanks so much for coming in this morning. Have a great day.
Thank you.